Try to catch me howling at the moon.
Turn assets into cash. Your job as a business person is to find a way to take an asset and turn it into cash. You're all here because you decided to create an asset. What is that asset? Business, right. You all decided to create an asset. An asset is something of value that's larger than the expenses that it takes for it to exist. If the expenses are higher than the value of that thing, it's not an asset. What's it called? Right, a liability. Assets make you money or time. Liabilities cost you money and time. Your job is to take that asset and create sales. Then turn those sales into profits and turn those profits into cash. Profits and cash are not the same thing. We're going to dive into that further as well, but if you can't pull cash out of the business that's in quantities greater than the cost, then you have a liability, not an asset. As your asset produces an excess amount of cash, you can choose to reinvest that cash back into the asset so it can continue to return even more cash, which is nice. Or if you've capped out the amount of money that you can make in your existing location, which as a fitness studio, as a gym, if you do all the right things, you'll probably get to that point at some point or another. You can invest that excess cash into another asset, such as a second location, or an asset separate from the current model, such as a different business altogether, or other investment vehicles, such as real estate, the market, you name it. We're going to dive into those areas as well.